This is a presentation on normal balances in accounting. Some accounts have debit balances, while other accounts have credit balances. Most learn about normal balances as they learn about debits and credits. So what increases an account? It depends on the account. Some accounts increase with debits, while other accounts increase with credits. So let's take a look at some accounts that increase with debits. Some accounts are asset accounts, some are expense accounts, and some are withdrawal accounts. Let's take a look at some asset accounts. Some examples of asset accounts are cash, accounts receivable, inventory, and equipment. We would say that cash normally has a debit balance. Let's take a look at some expense accounts. Some examples of expense accounts are rent, salaries, utilities, and insurance. Now let's take a look at some withdrawal accounts. Some examples are owner withdrawals, and in the case of corporations, dividends. Those were some examples of accounts that increase with debits. Let's take a look at accounts that increase with credits. Some accounts that increase with credits are revenue accounts, liability accounts, and capital accounts. Let's take a look at revenues first. Some examples of revenue accounts are sales, doctor fees, and interest income. We would say that sales normally has a credit balance. Let's look at some liability accounts. Some examples of liability accounts are accounts payable, accrued expenses, bank loan payable, and deferred revenue. And let's take a look at capital accounts. Some examples of capital accounts are owner contributions, and in the case of corporations, common shares. So those were some examples of accounts that increase with credits. So what increases an account? Well, in the case of asset accounts and withdrawal accounts and expense accounts, they increase with debits. Liability, capital, and revenue accounts increase with credits. And it works the other way too. Asset accounts, withdrawal accounts, and expense accounts decrease with credits, while liability, capital, and revenue accounts decrease with debits. So as a summary, cash is an asset account, so it has a debit balance normally. When cash is received in a business, the account cash is debited. When the business pays out cash, the account cash is credited. Sales is a revenue account, so it normally has a credit balance. When sales increase, the accountants credit the sales account. And if the sales account needs to be decreased, the account is debited. I hope you enjoyed the video. Thank you for watching.